What's up, everybody? This is Jimmy with Trading Decoded. It is May 23rd, 2024, 4:08 in the afternoon. Oh, baby. What a beautiful, beautiful day for a trend. Sadly, I pumped myself up last night, this morning, looking to play calls today. And then they threw a wrench in that plan leading up into the open. And as always, we find our call put scenario, and the put scenario paid bigly. Lasted way longer than I ever thought it would, but we're going to go over that trade. But before we get into all that, please, guys, do me a favor. Subscribe to my channel. If you get any useful information out of these videos, I'd really appreciate it. It helps me out, not financially because YouTube doesn't really pay shit, but I'm on a mission, right? I'm on a mission to get a play button just because I think it'd be cool to have. Also, like, share, if you could, these videos. That would be awesome too. But without further ado, let's go ahead and launch the charts and see what we had to work with this morning. We had a decent but uptrending range, massive gap to the upside. Okay, both on SPY and the Qs. All right, so if you look at the Qs, and that's what this big red box right here is, from yesterday's close in pre-market to this morning's, after hours, in opening this morning in pre-market. We draw all our lines. I do the Qs and SPY every day, but we'll get into this red box when we get there. So this morning and last night, we were all excited, ready to play calls. Everything's at all-time highs. All of our top 10 was green. Everything looked good for calls. Nice, strong momentum. And then 8:30 comes around and we start to top out. That's where our pre-market high line is for the day. Our pre-market low was here because, well, it acted as a decent support several times, including all the way here. However, even though I wanted to wait for a pullback to buy calls, I was hoping we were going to stop moving down at our pre-market midline, because I wanted to buy calls off that support, looking for the move back up to 534. Well, we fell below that line, and 925 comes around, and I tell everybody, well, our pre-market, our put scenario was originally, in my head, going to be a break of pre-market low, looking for a move down to the next line, just like we always do. However, that happened before open. So as we move down, I said, guys, at this point, we're going to have to wait for a pre-market breach of 532.70 for puts. And if we want calls, I'd wait for 533.52. Just like normal, guys. I was all ready for calls until this started to happen. Okay, this is not a trend for the day. Never thought today was going to turn into what it did. However, I get ready for my entries based on what is happening leading into the open. We talk about this all the time. If you watch my videos, you've heard me say it 1,000 times. I'm going to say it again. I tend to believe that the direction we are going into the open typically continues, even temporarily, after the open. Okay, so what that means to me is I am prepared to take puts, not jumping in blindly, but prepared to take puts in case what I need to see to be comfortable taking them happens. Okay, even announced to everybody, guys, I wanted to play calls today, so we got to see what we want to see in order to take puts. Now, at this point, we're also saying it's definitely a counter trend trade at the moment. So we're looking to get in and get out relatively quickly unless we see something that allows us to feel comfortable staying in. Boy, did we ever get to see things that makes us feel comfortable about staying in. I wasn't expecting to fill the gap, which is open to pink line. But that changed very, very quickly. We got in as we were getting ready to open. I said, guys, if you're looking for an aggressive entry on puts, as close to the blue pre-market low line as you can get would be the ideal entry that gives us a stop loss. If we candle close above this double top, we could have a nice tight stop. We're aiming for 532.32 to start. Guys, we got in somewhere in this candle. I didn't get the very top because, well, I wasn't quick enough, but it stuttered around here for probably 15, 20 seconds before it really started to push down. At that time, Qs hesitated 0 to start moving down. 0. It opened here and literally started to shoot down, breaking through its pre-market low. It was game on. Now, what ensued after that was nothing short of beautiful. Okay, now if you look at the ADD candle, ADD at the open started with a green candle. Okay, nice big green candle. I don't trade ADD. I use it to keep me in trades, especially if it's doing the same thing that the Qs are. So I used my Qs as my reasons for taking trades aggressively. I stay in those trades if I see something like this happening on ADD. Okay, so the very second candle of the day, ADD started printing red. Now I'm feeling better because Qs are aggressively selling off. And we got in, and as we got to our profit target area, I said, guys, Qs are still breaking supports. And as long as they stay below 499 or 459.86, I'm staying in this trade because ADD is telling me there's momentum in this move to the downside. And then we started to talk about, man, if we can get a candle close below 459.40, Qs have a big old gap that's going to have to be filled. We stayed in that, guys, and we got the gap fill. All right, we got the gap fill. Now, I was already out because I took it to the pink line. Sadly. Now, the gap fill on Qs brought us all the way down to this low here. That was a 300% return. Where I got out, we ended up getting out right around 90%, 87 and change. But this thing ended up gaining a lot of momentum, and volatility started to creep up really, really fast, and it just kept going. Now, you might see some new markings on the chart here. The markings were because I had people asking around this time, would you consider calls now? Now, again, we're still assuming and believing that the market is bullish overall. Not at the moment, but overall. I am starting to try and let people know with these little thought bubbles or whatever you want to call. I'm marking every time people wanted to buy puts where I'm trying to tell them how to spot a reason that maybe you shouldn't, or calls for that matter as well. So as we're moving down, we get down to the pink line, and a lot of times people buy calls or puts when we get to these lines, expecting us to get bought up or sell off when we get to them. Okay, now this was yesterday's high of day. So the point is, when people start asking me that question, I say, I wouldn't buy them here because momentum of ADD is still coming down. I wouldn't buy calls here. However, some folks are waiting for pullbacks and asking, hey, now that it held here, would you buy it the next time we got to it? And I always tell you guys this in these videos, and I tell them in real time. I do not think it's wise, because statistically it's not, to buy calls off of a support, which was proven to be support just a couple minutes ago, if you're coming off of lower highs. That is what this is here telling you. See this? It's a lower high. Usually, I am interested in buying puts before we break support off of lower highs, because the usual move from that lower high coming down to a support is a failure of the support. Statistically speaking, you can go back and look for yourself. Do not take my word for it. So for those of you who wanted to buy calls, I remind you, I wouldn't buy calls here because we're coming off of a lower high, even if we weren't doing a strong move to the downside. I don't buy calls on support off of a lower high, and I will show you this all throughout this chart, how often this ends up being the case. Okay, both calls and puts. Don't buy calls on support if we're coming off of a lower high. Typically, the support is likely to fail. It did exactly that, and where do we think in a downtrend, when we break support, where do we expect the move to go next? To the next support. Okay, great. Would you buy calls here? No, I wouldn't, because momentum is against that. No calls should be talked about at this point in time. Where are we going to go if we get through the support? Right to the next line. That's what all these circles are here for. And from that one to the next one where we did find support. Okay? Now, at this point, Jimmy, would you buy puts at this resistance? Sure, it's a pullback to resistance. But where are you looking for profits in this trade? Where are you looking for profits in this trade? What has been the success rate of a candle close below this yellow line of support? 0%, right? Okay, so should we respect that for the odds that it has given us thus far? I say yes, some people say no. For those of you who say no and you believe that the trend is going to continue down, that's fine. All I would ask is that as we get close to that line down there, that has proven to be a rock solid support level at that moment, move your stops tight in case it holds as that support again. That's all. You can let greed get involved with your trades. That's fine. Just protect yourself in the event that greed doesn't reward you. That's all. That's all I'm doing. This is what we do all day long. Sure, try and hold for that. I'd love to see SPY continue to drop. I'm not in a trade, so I have nothing to gain, but I'd love to see SPY continue to fall for everybody who's still holding their puts. But in case it doesn't, as proven to be the case here, maybe lock in the max profit that you're going to get at this moment. That's all. You get stopped out if you had a stop. Otherwise, you gave up a lot more profit than you needed to by hoping for more at that moment. Okay? Okay, Jimmy, well, that's a strong support down there. Would you buy calls? No. Why? Because, well, this. Okay, this is what we're watching. This. NVIDIA was not pulling back. It was pulling back at the time, but NVIDIA was strong as hell all day today. But the Qs, still very much a downtrend. I'm not trying to catch a falling knife. Okay? Okay, Jimmy, well, would you buy puts when we pull back up to this yellow line again? No. Well, why not? For the same reason you didn't want to buy calls here on the support. What is this right here? This is a higher low. But Jimmy, we're coming off of a lower high. That's fine. What does that make this now? A wedge. When should you play a wedge? At least wait for a break of the wedge. Okay? If you're gonna play it like that, okay, here's your wedge. Fine. That's your top of your wedge. Here's the bottom of your wedge. I believe because of the higher low, we're going to break resistance, not respect it. Okay? But even then, people wanted to buy puts at this yellow line. I said, I wouldn't, guys, because we got this higher low here. And sure as shit, it ran through that resistance and right up to the next resistance, which is right there. Okay, now we held that line pretty strong. And at the same time, the Qs were also rejecting or breaking their trend line to the downside. Okay, they had just closed below support. Their next level of support was all the way down at this orange line. They got above it, turned it into support. We candle closed back below it. We're looking for the move to go back down to support. So 1017, you got that close below support on the Qs, giving us the ability to have room to the downside. Your stop loss is a candle close back above it on the Qs. Otherwise, let's get in, let's get out when we get to the known support levels on SPY or the Qs. Either way, 1022, we hit support on SPY. 1022, we hit support on SPY and Qs. There you go, clear as day. All right, we bounce off of it again. Jimmy, how about this time? Would you buy puts at this yellow line again, Jimmy? It respected it again. Look, it held resistance here. It held it here just a couple minutes ago. Again, no. Why? Well, the same reason the last time we talked about it. We're coming off of higher lows. Higher lows means the buyers are getting stronger, not weaker. If the sellers were still stronger, they'd at least bring us back down to that solid line of support down here. But they can't. Not only once, not twice, but 3 times they couldn't bring it down. I expect resistance to fail. Where is it going to go? Probably up to the next resistance. It's like clockwork, guys. Start looking for these things. Higher lows are bad for puts. lower highs are bad for calls. If you can retain any information from these videos, start with that one. It will keep you out of a lot of bad trades. Now, I'm not suggesting jumping into calls here either. Okay, it was still a blood red market. So I'm not suggesting calls. I'm saying puts should be ignored or not taken at this moment. More often than not, we break resistance, not hold off of higher lows. Sometimes it holds resistance. Okay, this was one of those times. Right here, this is a higher low in relation to this, and we still held resistance. That's fine. But you go through any chart that's already printed, find your support resistance levels, and find out how often this would have kept you out of a losing trade. Okay, this type of scenario right here. So we get in up here again because it's a strong resistance here on SPY. It's a strong resistance on Qs. And down we go with the same exits as we had before. Now, if we break through this level of support, our next line was all the way down here, but we always keep an eye on Qs. So if Qs are hitting support down there at 1057, actually Qs hit their pink line at 1055, which is probably what this circle is right here. Yeah. And then at 1057, Qs made it all the way down to their next orange line. Okay. So exit there, exit here. All right, Jimmy, now the market's real red. We just made a new low of day. Everything's selling off. How about this pullback? Would you buy this one? You could try it, which is fine. But once we put in this higher low, this is how I tell people, if you buy puts at resistance, you've done nothing wrong. What you have to watch out for is if we don't make it from that resistance back down to the support it just came from. If we put in a higher low, be prepared to stop yourself out or take yourself out with a little bit of profit or break even. Higher lows are bad for puts, whether you're in them or whether you want to take them. And like clockwork, higher low shows itself and then rips off to the upside. Even in a downtrending market, you should respect this rule. Pay attention to it. Doesn't work 100% of the time, but it'll keep you out of good trades or out of bad trades, and it will help you not take bad losses if you already are in a good put trade. There was nothing wrong with considering buying puts here at 1104. All right. Qs at 1104 were nowhere near resistance. Actually, they were at a resistance here. So, okay, fine. But the minute we can't make it back down to support, you've got to be ready to get out of that trade. Okay. So there's nothing wrong with that. We made a support that got respected. Resistance pullback during a downtrend. Awesome. Be prepared in case it doesn't make it down there. That's it. Then we start chopping along. Once again, would you buy puts at this resistance, Jimmy? Look how strong it's holding. Yes, you're absolutely right. Look how strong it's holding. But also look at how much higher we're moving each time we reject it. Higher lows, higher lows. All right. Why is there a call here? Counter trend trade. Absolutely. Why? Because this is a strong level of resistance. And I told everybody if we can break that resistance, we'll likely move up to this double top right here. So even through the pink line and through the yellow line. We got to the pink line. I always suggest taking profits at the pink line, whether you're in calls or puts. We breached up above the yellow line and fell about 8 cents short of that resistance there. So you could have squeezed a little bit more out of it, but there you have it. Okay. Okay. Now we rejected. We put in higher lows. Okay. Jimmy, would you buy calls now at this line? No, still not calls. Would you buy puts here? No, I wouldn't, for the same reasons. Okay. This is still technically an uptrend. All right. Now, if you want to buy puts in a situation like this, I would recommend that you at least wait for a candle close or just stop yourself out. Hang on one second, because my wife is impatient. All right, guys, I'm really sorry about that. My wife is at the doctor with my youngest son, and she needed something. And my electrician showed up, who's also one of our members. But either way, wherever I was, if you're going to buy puts up here, you want to make sure that you stop out if we close above that resistance. Okay, that's it. Otherwise, I suggested that you wait until we break support. Now, this is a lower high. You do have support here. I expect that to fail because of the lower high. Fine. Problem is if you buy puts on this candle, you have to know where your next support exists. It's right here. Now, the move from this support to this support is not big enough to take the risk, in my opinion. It would be better to wait for a close below that support and see if there's at least 20 cents left before you run into the following support. Now, we talked about the following support being right here, and that if it got through that, it's likely to make it down to the support here. You guys can watch this happen all day long. Now, again, this is here because people were interested in the idea of potentially buying calls lower high. Lower high, support is likely to fail, and it did 2 candles later. Where is it failing to? The next support down, which is right here. Okay. Now, you could have bought calls down here, but I'm not catching knives, right? And then I took my lunch break. So there's nothing going on here other than SPY just dying. And we make it all the way down to the pink line. So today was interesting in that we took out the entire yesterday's range on both SPY and Qs. We got through the pink line number 1 on the Qs and then pink line number 2 on the Qs. And we did the same thing on SPY. Pink line number 1 got taken out. Pink line number 2 got taken out. What a glorious, glorious thing. However, when we got back, I took this trade on my son's account with a single SPX contract. But the reasoning for the trade was we got down to the pink line. It held as support. However, we had just got done saying, guys, if Qs could stay below 455.66, I believe we're going to make it down to 454.41, and even Qs might take out the last pink line of the day. So the entry for that trade was because Qs got below support with decent amount of potential move. SPY was at resistance. Qs were at resistance. We jump in. We look for the move to go down. I was telling everybody today, man, I want to see Qs close out, get through and down to the pink line. I tried to hold on, ended up getting stopped out of the trade in my son's account on this green candle here. Was still a 65% win or something like that. Beautiful trade. And but likewise, guys, here was another entry. We closed below support. We pulled back, proved it as resistance. Here's an entry. We're still looking for the pink line. Now, late in the day, the pullback like this hurts, but I was watching the contracts. It still ended up making a fair amount of money even after this pullback if you took that trade. So entry here because Qs pulled back and broke support and pulled back to resistance. We broke support, pulled back to resistance on Qs and SPY. And this is when Qs hit the pink line. All right. We agreed to shut the room down if that were to happen. It happened. We closed the room. And ironically, I lost internet like 7 minutes later. Anyway, it came back on like 22 minutes after that. But nonetheless, we were done for the day, guys. Our win-loss ratio after our opening trade was 11-1. 11 greens to 1 red. We ended up closing the day like 4-1, 5-1, somewhere in there. Still a very green day, but just like in yesterday's video, okay, and I didn't get to tell you guys this, but I made sure our community members knew. When we decided to call it a day early yesterday because the chart wasn't moving, I always tell people, you know, we always think that we're going to catch the move that we don't know is going to happen. And then when it does happen, you think that you're going to play it properly. Just some food for thought. And maybe I did mention this in yesterday's video, but after 2 o'clock yesterday, after the move started to really happen, our number of red trades doubled. The number of red books in my community literally doubled from where it was prior to the chart starting to move. Further proving that just because you see a big move that happened while you were gone or you chose to be done for the day and then that move happened, doesn't mean you're going to take advantage or play that move properly. Okay? Our poll yesterday ended up being way, way closer to 1-to-1 than what it was before I tried my best to convince everybody to walk away. Right? Some people made money. Some people played it properly. Some people did fine. But a lot of people made their good day bad, their bad day worse. Okay? FOMO creeps in, emotion gets involved, and all the rules and everything that you like to see goes right out the window. So don't ever tell yourself, I can't walk away because the chart's telling me I should, out of fear of missing what you don't know is going to happen. Because when you start to think that way, you'll also convince yourself that even if what you think is going to happen happens, that you're guaranteed to play it properly. You're completely ignoring the fact that you cannot trade without emotions. Most traders struggle with the emotional side of trading. It's not the technicals. So if that's the case, for you to see a drop like this and not suddenly feel the urge to jump into puts, you won't care if it's right on a level of support. You won't care if it might be the bottom of the day. All you see is a bunch of red. You weren't a part of any of it, and now you're pissed. The market owes you, and you're going to get your piece. We've all lost to that. I know I have. And if you've not been able to lose to something like that, congratulations. Just give it time, though. Okay? If you're going to play late in the day, you're going to play after big moves, at least play during pullbacks to resistances, so that if that resistance no longer is holding, then you can get out quickly. What you're hoping for is that whatever it bounced off of to pull back, you're hoping to make it at least there. And if the trend is going to continue, in this case down, we would need to make a lower low. So you're aiming to get in here. You're hoping to get at least here so that you're at least green at the moment with a little bit of breathing room, hoping for that support to not be the final one of the day that ends up holding, and that we get through it and continue down. That's why support and resistance is so goddamn important, because it gives you visual references of where price is likely to end up. If we break a support during a downtrend, we look for it to get to the next support. Here's a very tight range on Qs. We broke support, it stopped immediately at the next one, got through it, and went right to the next one where it held. And it pulled right back up to a resistance, right back down to support again, turned it back into resistance, ultimately breaking the next support down, low a day at the time, and eventually getting down to the next one. Now, you might not trust support and resistance as much as I do, but maybe you should start considering it, because this pays very, very well when you learn how to use it to your benefit. It's provided me the life that I only dreamed of. I'm not rich, but I am very comfortable. My bills are set to auto pay, and trading pays for it. We do this every day, live on the microphone, in front of God and everybody. Okay? We talk about the charts in depth all day long, and people are starting to realize that you can become a profitable day trader and without being super risky and not feeling like you're gambling all the time. Okay? We have a very, very high win rate in our community. It's not 100%. Nobody has a 100% win rate. We got plenty of people that are well above 90% win rates on day trading. Okay? There is a way to do it. And I spend every day making these videos trying to teach you how we do it. All right? And that's pretty much it, guys. We had a nice bleeding market, a lot of money to be made to the downside. Hopefully you guys caught some of it. If you got burned on calls, I'm sorry. If you got burned holding puts through pullbacks a little too long, I'm sorry. But, that's the breaks. With that said, hope you all found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, well, we'd love to have you. There's a link down below. And if you like what you get for the free week, the first week is completely free. We'd love to have you as a paying member if you found value in it. And if not, I hope you learned something either way. And with that, enjoy the rest of your day. Till tomorrow, I love you guys. See you.